Hey traders, welcome back to this week's weekly Forex forecast. We have a huge week coming up next week because we've got 4 interest rate decisions. I'm going to talk you through those interest rate decisions. The fact that we're going to get 2 potential rate cuts out of the US and Canada is likely to affect the markets next week. I'm going to show you the pairs that I'm going to be looking at trading next week, the pairs at the top of my watch list, and how I'm going to be looking at trading them in and around the news events next week and the 4 interest rate decisions. So starting with euro dollar, we always start with euro dollar. Many of you like it. It is important, kind of the inverse of the dollar index. And what's interesting about the euro and the dollar as a pair is that it just has kind of started to lack volatility, and we've seen volatility dry up. I mean, I've zoomed out here so you can see we're kind of trending. We kind of had this sell-off, and now we're kind of sitting, you know, below this high and above this high, and we're just kind of chopping around, not doing too much. So going into next week, you'll see that yes, US dollar shorts are one of the top things we're going to be looking at. We're expecting a 25 basis point cut from the Federal Reserve on Wednesday. And euro dollar on balance is something I would prefer to look at to the long side. So we're not really going to look at euro pairs per se. I think there are better pairs and better currencies to the long side than the euro, which of course we'll go through in today's video. But on balance, if we zoom into euro dollar, I do still favor euro dollar to the long side, or bullish setups. So that could be euro dollar sells off, but bullish setups looking to buy the dip in euro dollar next week. So if we zoom in, you can see we've got the major prior high over here, and just above that sits the sell zone. So we have the buy zone. Many of you already know this if you follow these videos on a regular basis, and the sell zone. And these are the areas where the market becomes overbought or oversold during that week. So these levels are for the next 5 days. And then after the next 5 days, we get fresh levels. And this is all in the Hedge Dash Analytics platform, which is, the link is in the description. Many people ask in the comments about it. So if we get euro dollar pulling back, what I want to see is, because it's not a very bullish market, because the euro is kind of weak, and we also have the US interest rate decision on Wednesday, I would probably filter out any kind of intra-week stuff on this. It's probably just going to chop around into Wednesday. So what I would like to see is, I'd like to see euro dollar sell off, breach the 1.16283 where we enter the buy zone. It turns oversold on the week, and we have a nice daily support level right here at the 1.1608. This is where price came down before, tested and rallied to the upside. So any kind of push into this area next week, this is pretty much the only setup I'll be looking for in euro dollar next week. Any push into this area, I'm going to be looking for sellers to attempt a breakout of this low and to get trapped. And as they liquidate their positions, I'm going to look for this 1 or 2 day reversal back inside the range. This is the exact setup that I'm trading day in, day out with GMT members in the real-time setups. So that's what I'm going to be looking for. The point at which we turn extremely oversold next week is the 1.15237. So I don't think we're necessarily going to get there. We could get there if you have a catalyst. Do we have a catalyst next week? Yes, we do, with the interest rate decision on Wednesday out of the US. So very, very unlikely this gets there, you know, before Wednesday. In fact, it's virtually guaranteed that euro dollar will not get to these gold levels at least before Wednesday. So I would ideally like to be involved in this kind of setup, and the same with the rest of the markets, to be honest, between kind of Monday and Wednesday if possible, because then Wednesday, Thursday, and also Friday, we've got the interest rate decisions. So this is what I'm going to be looking for next week in euro dollar. I do think there are better markets, but euro dollar for me currently is still long opportunities or do nothing. Okay, so moving on to the portfolio selection, and what we're seeing here in the portfolio selection with the performance metrics is quantitatively we're starting to see risk on coming into markets as stocks are making new highs. Now, my view is that stocks could be close to topping out. However, right now, you know, going into the next 5 days, quantitatively, and this is where we want to take the data rather than an opinion, we want to be kind of data-based rather than opinion-based. But right now, quantitatively, it is risk on coming into Forex. We know this because the US dollar is the #1 short going into next week. And of course, you know, with the FOMC meeting on Wednesday, 25 basis point cut expected. This is probably on balance going to push US dollar lower. Depends what's said in the meeting, but you know, it's also expected. So a 25 basis point cut even if it does cause the dollar to sell off, you know, if it's already expected, it's probably, you know, more or less priced in. And so really it's going, like I say, going to come down to the rhetoric which accompanies the 25 base points as to whether we get, you know, the dollar really selling off or just kind of chopping around or even going higher. Unlikely to go higher because we've had very, very weak jobs data. So in my opinion, either they're going to come out, it's going to be a bit of a non-event, or it's going to be very bearish for the US dollar. If it's very bullish, I'd be surprised, because it means they would probably have had to have said, we've cut 25 base points, but we're not going to cut anymore. You know, we've just seen soft inflation, soft jobs data. So what's the odds of that happening? Probably quite low. Obviously possible, but quite low. So the Japanese yen is also, you know, the most risk-off currency. This is the number 2 short. And alongside that, we have the Canadian dollar as number 3. Now, you could look at pound shorts as well, but on balance, I favor Canadian dollar shorts based on what we're seeing here in the quantitative data. To the long side, we have the Australian dollar as the number 1 long theme going into next week. It's a little bit overbought on a rolling daily basis, so it needs to pause and correct. But what's interesting about this is the Australian dollar is the most risk-on currency. And so what we're starting to see also now is the New Zealand dollar catching it up. So although the Swiss franc and the euro are both on absolute terms here stronger than the New Zealand going into next week, look at the momentum shifting in New Zealand dollar. So I'm anticipating the New Zealand over the course of the week to go higher and euro and franc to go lower. So I do like New Zealand longs heading into next week, and Aussie to the upside, New Zealand to the upside. They're two of the most risk-on currencies. So we're playing that kind of risk-on theme versus some of the safe haven assets and also the Canadian dollar. And so alongside that, you know, what's the third one we want to look at? Is it going to be euro to the long side versus the dollar, the yen, and the CAD? You could look at that, but on balance, I'm going to still go for the Swiss franc. Just because of, you know, the way it has been holding up for, you know, quite a while. So you could go with the euro. I'm going to go with the Swiss franc as my kind of third favorite to the long side next week. So we're going to be looking at in today's video, and at the top of my watch list for trading next week is going to be Aussie dollar to the upside. So long opportunities in Aussie dollar where I can find them. Aussie yen to the upside, Aussie CAD to the upside, all of those are risk on trades. We're also going to be looking at New Zealand dollar to the upside, New Zealand yen to the upside, New Zealand CAD to the upside, which is risk on. And we're also going to be looking at US dollar franc to the downside, franc yen to the upside, and CAD franc to the downside in today's video. Okay, so kicking off the watch list, as we always do with crude oil. Now, crude oil is a market that hasn't really been doing much. I still favor short opportunities on balance, and what I want to see in crude oil next week is the following. We're kind of crisscrossing the moving average, so I want to see this continue to pull back, and if we start to pull back and we breach the prior high over here, there's a nice high here, daily high, and we have a 4-hour high over here. So this kind of area, right as we enter the sell zone, is where I'm going to be looking for an attempted breakout. You know, price may actually come down, kind of attempt to hold this level here. And I'm going to be looking for a failure and a liquidation back inside the range, because overall, I can be short or do nothing in this market. So I can sit it out or I can take short opportunities. So I do like this going into next week for a potential short above these highs over here. The second thing you can look for, of course, is if we start to make our way back, but then you re-break. So you get, what you get is you get this kind of counter trend move, a bit like this. Counter trend move during the week, and then instead of taking out the upper bound, you sell off back down below the moving average, and you can look for that pullback into the moving average and that bear flag down to the profit taking target next week at the 59.01. We turn extremely overbought at the gold level if we get there. It's unlikely we get there. Usually you need a catalyst, so unless we have a catalyst, we're not going to take these levels out, almost certainly. But the 69.76 is where we turn extremely overbought. For me, this is where if I'm not involved, I can take a short position from above here as well. And if I am involved, I can actually take a second short position from above here if I so wish. Okay, so kicking off the Forex universe with the Aussie pairs, starting with Aussie dollar. Now, Aussie dollar's already trending to the upside. And what I want to see is ideally before FOMC on Wednesday. So if we get a bigger sell-off on Monday or Tuesday, what I'm going to be looking for is this. Ideally, I'd like to see this come back as a counter trend trade. And if possible, breach, maybe it pushes even through the bottom of the channel, depends how quickly it comes down. Breaches the 0.65787 and perhaps even stair steps this prior high over here. And this is where I'm going to be looking for a 1 or 2 day reversal to the upside in Aussie dollar. If we start to make our way back, and let's just say we kind of do this by the time that FOMC comes around. So the market is corrected and it hasn't really gone anywhere. Then I would be looking at one of three things. Either we get a neutral outcome, and neutral outcome could be a rate cut. So it's neutral if the event goes as expected. It doesn't mean they don't cut rates. You know, neutral is they expect a 25 basis point rate cut and they get a 25 basis point rate cut and not much is said in the meeting, right? If that's the case, I will just be treating this as if there is no interest rate decision at all. So I'd still be looking for this from the lower bound. If we get a bearish outcome from the dollar, which I think is more likely than a bullish outcome from the dollar personally, based on what we were talking about earlier. But if we get a bearish outcome for the US dollar, they cut 25 basis points, maybe they cut 50 unexpectedly. I don't think they will, but you know, hypothetically, something like that is possible, certainly more possible than, you know, than raising rates or anything like that, based on the recent data. So if we get a bearish outcome reactively from the dollar, or Powell says, you know, we're going to cut 25 basis points this time, but we may actually need to cut 50 basis points next time. Maybe he puts 50 basis points on the table, you know, at a future meeting. Then you could look for that intra-week breakout. So it basically does nothing. Then we get the bearish reaction. You get that rally like this as the dollar sells off. You can look for that pullback and then the follow through into the profit taking zone, which starts at 0.67254. And a third and final outcome, really, you know, it can either be neutral, bearish, or bullish, is if we get a bullish outcome from the dollar, which I think is highly unlikely, but if we did get that, reactively, any sell-off down to the second lower bound is where I would be looking for a potential opportunity in Aussie dollar, and there's a nice low down here as well. So if we get, for whatever reason, I don't think it's going to happen, but it's worth having all options on the table. So, you know, when the event comes around, you're not surprised by anything. You know, you've got a plan for everything. But if there is strength and we get a big sell-off in Aussie dollar and we come all the way down to the 0.6505, this is where I would begin to look, because even with a bearish catalyst, we tend to hold these gold levels for the week for that 1 or 2 day reversal. So that's what I'm going to be looking at in Aussie dollar next week. And I'm going to be looking at this 3-step process for all of the currencies and pairs with interest rate decisions next week, which is quite a few of them. Next is Aussie yen. Now look at Aussie yen. We've got a breakout of this major consolidation. We've just broken out. We kind of pulled back and tested it. And now we're starting the next leg up. So I'm going to be looking for a couple of things next week in Aussie yen. We do have the BOJ on Friday. So what you might find is with the Japanese yen pairs, you might find that they struggle to really go anywhere, you know, or break out intra-week. So again, intra-week trading in the lead up to an interest rate decision can actually be not a great policy, because if you're intra-week trading, you're looking for breakouts intra-week, you know, when markets are not yet overbought or oversold, then what you want to see is you want to see momentum come into the markets. Well, if you've got an interest rate decision coming up, you don't tend to see that momentum. It can happen, and it does happen, but most of the time, we're dealing with probabilities here. Most of the time, it just kind of chops around and you lack direction. So you're breakout trading and you will lack a direction for 4 or 5 days into the BOJ. You know, that is not great. So what I'd like to see here next week specifically is this. I'd like to see Aussie yen just kind of grind lower, and at some point next week, test this prior low over here, stair step this prior high, and breach, most importantly, the 97.00. Because this is where we turn oversold during the week in a market I'm looking to be long. So that is where I'm going to be looking to buy the dip. So I'm going to look for this sell off and buy the dip right down here for a 1 or 2 day reversal. Now, if you capture that 1 or 2 day reversal and that swing to the upside, you know, a lot of the time in this kind of breakout or trending market, it just consolidates and it, you know, will go up the following week. And that's when you can actually have a good intra-week breakout. You know, if you've got a prior test of an upper or lower bound in 1 week, so this comes back, test the lower bound next week, the week after, if it bounces, you can see that kind of flag and then that intra-week breakout. It kind of, you know, tends to oscillate between those two. So that's what I'm going to be specifically looking for next week. And if we do get that specific setup, I'm going to be pulling the trigger in real time with GMT members on this to the upside. So the second thing next week is, because the BOJ is all the way on Friday, you know, normally we'd be looking for the intra-week breakout as well. I would kind of highlight that, but also on the actual event, if it comes down to the second lower bound, you know, normally I would be looking at trading this as well for a few days, but because it's out on Friday, you know, do I really want to get involved down here into the weekend and then kind of hold it over the weekend? Probably not. So realistically, this is the setup that I'm looking at in Aussie yen next week. If it doesn't come all the way down and test this area, then I probably won't trade it. If it does, I'll pull the trigger on a long opportunity. Okay, so moving on to the New Zealand dollar pairs, starting with New Zealand dollar to the downside, so New Zealand dollar versus the US dollar. And you see we started to break out of this channel last week. In fact, we initiated a short with members in this area here. We broke out and I shorted this move down here for, it was about a day in this area. It was a decent trade last week. Now, that was utilizing very similar to what we were talking about earlier on in the video, whereby we had CPI last week, and I knew that as we started to trade above the weekly upper bound, because what happened last week was we pushed into the weekly upper bound, and this is where we sold off from the weekly upper bound. And I knew that, you know, very often before a big news event like CPI, you don't tend to see directional moves. So yes, we got this pushing into the weekly upper bound, and yes, we started this kind of attempt of a breakout, but I was quite confident that we weren't going to find direction before CPI. And in fact, it was only after CPI that we started to push higher. So what I'd like to see coming into this week is, again, you know, the problem I have here is overall, we still have yet to make a new high in New Zealand dollar. So when we talk about FOMC on Wednesday, I wouldn't really want to see this breaking back inside the channel, you know, down to here for a buying opportunity, because if we do break back inside the channel and we break all the way down to here, you know, that actually wouldn't be very good price action. So really what I would want to see here is mainly, you know, if you are trading this, a kind of breakout from the FOMC meeting on Wednesday. So I would anticipate, you know, this doing nothing, perhaps even kind of pushing higher, pulling back, and just sitting above the channel. You see this all the time. The market gets in a position where if the, you know, the news event comes out one way, it can collapse back inside and trend down, or it can explode higher. So I would be looking at this for this kind of move here, whereby, you know, if you get a neutral or you get a bearish outcome for the US dollar, you can look for the breakout. You get the break of the channel, then you get the counter trend break. That's where the moving average follows it, and you get that bull flag set up into the 0.60082. So primarily because we don't have a prior high yet in New Zealand dollar, it's just kind of catching up. It hasn't yet turned fully bullish. I'd be a little bit wary, and really I would want to see, you know, if you are going to get involved, that kind of bearish catalyst from Wednesday onwards. So specifically in New Zealand dollar, that's what I'd be looking for. If it comes down below the 0.5874, you know, yes, you could probably look at a double bottom, you know, maybe even a bounce back up to the channel. But I think at that point, you know, if you've got that kind of dollar strength, I think there's going to be better opportunities elsewhere in terms of, you know, currencies to buy. Next is New Zealand yen. Now, of course, we have the BOJ on Friday. So what I'd really like to see is I'd like to see this market come down next week and breach the 86.88. Now, there's a really nice low just here, and we have that classic textbook left shoulder over here. So we break down below this level, we pull back, we break above it, and then we come down. You could argue there is a bit of a test here for a right shoulder, but this is actually all one move. So it's not quite, sort of is a right shoulder, but it's not quite. A right shoulder, you know, tends to be an actual correction, you know, an attempt down. This is more just a pullback in this kind of trend here. So I would like to see this pull back into the left shoulder, into the prior low. This is where I'll be looking next week, especially before Friday, for a 1 or 2 day reversal back inside the blue range. And, you know, again, like Aussie yen, probably not going to trade this after the BOJ, just because it's on a Friday. I'd rather just come back on Monday, do a new assessment on Saturday, next Saturday, to see what's happening. So the setup I'm going to be looking for primarily is this in New Zealand yen next week. And the third New Zealand pair is New Zealand CAD. Now, we had a very strong move again in New Zealand CAD because we're seeing CAD weakness. So we're really seeing these markets pushing up versus the CAD. So I really want to be long or do nothing. I want to be looking for buying opportunities. So I do think we need to pause and correct. Same with Aussie CAD. And ideally, I'd like to see this come down, breach to 0.8171. Now, slight issue we have here is this is just kind of one big air pocket. There's nothing really here, maybe a little bit. I mean, this is more of a 1 hour low rather than a 4 hour daily low. So ideally what I'd like to see is this to come down, breach to 0.8171 and start to bounce and form its own double bottom. So now what happens is where there's no support over here, there is support, created by the price action itself. So that's what I'll be looking for in New Zealand CAD next week. And if we can get that before Wednesday and I can be in and out, that would be great. Otherwise, we're back to the BOC on Wednesday. So the BOC comes out and it's a neutral outcome, which means it comes out as expected. That could be raising rates, cutting rates, or whatever. It's just as expected. It's the consensus. Then I would look for this setup again. So this becomes the neutral setup. Why? Because if it happens before the interest rate decision, that's great. But if it happens after the interest rate decision, or if the interest rate decision comes out and it's a non-event, well, I'm back to just looking at the same thing as if there wasn't an interest rate decision. So that's what I'm going to be looking for on a neutral outcome. If we get the bearish outcome for the Canadian dollar, which I think there's a very good chance we could, especially if 25 base points, they come out with some more dovish rhetoric, then you can look for the re-break, again, above the moving average, but this will probably also be counter trend trading like this. That's the thing. All right, so you can look for the re-break on the counter trend move, and then the follow through into the profit taking target, the 0.83105. And the third and final thing is if we get a very, very strong Canadian dollar for whatever reason, although I don't anticipate this, just wargaming, planning all scenarios so we can be prepared. If that were to materialize, then it would be the 0.8101 where I would start to look for potential long opportunities. So neutral outcome or the opportunity to buy on the dip below the 0.8171, so where we turn oversold during the week before Wednesday. If we have a neutral outcome, same thing. If nothing happens into Wednesday, then I'd be looking primarily for that weakness and the push higher. Pull back, you can look for the follow through into the upper bound. And if we get an unexpected rally in the CAD because, of whatever, there's a very hawkish outcome, even though it's not expected, then it would be the extremely oversold level next week. I'd be interested in starting to look for long opportunities. Okay, so wrapping up the Forex universe with the Swiss franc pairs before we move on to gold and silver. And you can see we've started to kind of pull back in US dollar Swiss franc. What I'd like to see is I'd like to see this kind of A, B, C, this kind of big bear flag. There's the high, down, A, B, C, above the 0.80334. This is where I would start to get interested. Now, it might just push straight through and retest the high. Just because the bear flag doesn't mean it can't come back and retest the high. If it does do that, then I'm going to be looking for potential short above there. But because this is setting up as a potential bear flag, I do suspect that the high might not be taken out. Again, if it goes straight up, if there's no kind of double top here, it just goes straight through with momentum, then I would be looking for a potential short above this high. However, if this is going to bear flag and it's going to make a new low and take out the low of the prior bear flag, because this is all a bigger correction kind of within, or this is a smaller correction within a bigger correction, then what I'd like to see it breach the 0.80334, and then I will start to look for double tops and reversal patterns in this area. And as buyers pull their positions, I'll look for that 1 or 2 day liquidation to the downside. Now, we do have the FOMC meeting on Wednesday, so if we get this before Wednesday, this is what I'm going to be interested in. If we get a neutral outcome from FOMC, we get 25 basis points cut and Powell just kind of, doesn't really say anything in the meeting, then I will also be looking for this setup. If we get a very bearish outcome from the dollar and this just pushes up, probably tests this high, intra-week and just does this, that's when you can look for your counter trend break on FOMC. Pull back, the moving average follows it like this, and you can look for that bear flag setup into the profit taking zone at the 0.78806. And I suspect we would, almost certainly, if we take out this blue level, I'd be highly, highly surprised if we didn't also take out this low. So I would aim for this low for any intra-week or post-FOMC shorts. And third and final thing, if we get a really strong dollar for whatever reason, although it's not expected, the 0.81098 is where we turn extremely overbought on the week, and it's where I would be interested in looking for a potential short. So I can still only short this market next week or do nothing, cannot buy US dollar franc under any circumstances next week. Next is Franc Yen. Again, with all the yen pairs with the BOJ on Friday, my primary setup that I'm looking for is a buy the dip opportunity once it turns oversold, in this case, on the week. So I'd like to see Franc Yen coming down, breaching the 183.49, and there's a really nice low here. It's above the halfway point. This is great. This is where I'd be looking for sellers who are already oversold on the week to be trying to push this even further and attempt to break out below this low. This is where I'd expect them to fail and to start to liquidate their positions, especially going into the BOJ, so maybe Wednesday, Thursday, looking to capture 1 or 2 days reversal. That's what I'm looking to capture. That's my profit objective out of any pair that I trade. I'm looking to try to capture 1 to 2 days worth of movement or expected movement. So if the pair moves, 30 pips a day, I'm looking for 30 to 60 pips. That's what I'm looking for. So that's what I see in Franc Yen. All of the yen pairs are pretty much, buy the dip or the opportunity to sell the yen if we get yen strength leading into the BOJ next week. And the final Franc pair we're going to look at is CAD Frank. Now, this has a really nice bear flag setup as well. So I'm looking for shorts above the 0.57962. What I would like to see is for this to pull back before Wednesday, ideally, and breach the 0.57962, and ideally hit the channel, hit the top of the channel. So, and the channel sits kind of at 0.580, you could say. That's what I'm going to be looking for a 1 or 2 day liquidation back inside the range. But it would have to do that kind of before Wednesday, so probably Monday into Tuesday. Monday would be great, but Tuesday morning, they're still going to leave you the whole of Tuesday for a reversal and a whole of Wednesday because we have the BOC kind of later on in the afternoon. So that's what I'm going to be looking for before the Bank of Canada on Wednesday. And if we have the Bank of Canada, nothing happens and we have a neutral outcome. So 25 basis point cut as expected, and the Bank of Canada just, don't really say anything in the press conference, then I'll just revert to as if there were no interest rate decision. I'll look for this setup. If we get the market kind of chopping around, pulling back, and then you get a bearish outcome from the CAD, which is, I think, very likely, then you can look for the breakout intra-week of this kind of bear flag, this counter trend move, most likely happen after Wednesday, pull back, maybe it retests the counter trend line move, and also, sort of hugs into the moving average, and you can look for that follow through into the 0.5698. That's the profit taking target to the downside next week in CAD Frank. And the third and final thing is if we get a very strong CAD, you could potentially look for a short above the gold level. So I just clean this off. I don't think that's going to happen, but if that were to happen, if we were to explode higher, then there is a nice high just here. We breach the gold level at the 0.58452, and that would probably be where we start to pull back, and retest, even if we are going to get a bigger breakout. So that's what I see. I do much prefer either the short opportunity before the BOC, or in a neutral event, or even, I would keep an eye out, especially the way this is positioned with this kind of big sell-off. I would keep an eye out for that follow-through trade on Wednesday if we get a bearish Bank of Canada, because I think this has a very good chance of playing out. Okay, so wrapping up the video with gold and silver as always, and because the US dollar is still quantitatively weak, this is a tailwind for gold and silver, and I still only want to be looking for buy opportunities in both gold and silver. Now, in last week's video, I said to you that this is overbought on a rolling daily basis, needs to pause, needs to correct, and it pretty much went nowhere. You can see it's just pausing, it's just correcting. Why? Because quantitatively it's overbought, it has to pause. So going into next week, what I'd like to see is, I'd like to see this come all the way down and breach the 3560.61. There is a low down here, it's kind of a minor low, so there's not too much here because it's such a strong move. What I'm most likely going to look for is for, again, gold to form its own support down here. So it starts to lack momentum, and I'll be looking for a double bottom, inverse head and shoulders for a 1 or 2 day liquidation back inside the blue range once it starts to trade below it. If we end up below the 3488.88, this is where we're extremely oversold during the week. What are the chances of that happening next week with gold? Very, very unlikely. You'd have to have some explosive catalyst in the dollar or something which causes a liquidation in gold. Unlikely to happen, but worth having on your chart nonetheless. And the third thing, of course, is now we're consolidating, and we're below the moving average. You can simply look for that intra-week breakout, especially if this just kind of consolidates into FOMC, then we get a weaker dollar. You could look for the breakout counter trend and the next leg up into the 3704.08. And last but not least, we have silver. This is also a long or do nothing for me. I cannot short this market under any circumstances. So what I want to see is silver coming back, very much like gold. We do have a nice 4-hour low just here. So if we do come down and we breach, so we turn oversold during the week, and we breach the 40.13, this is where I'm going to be looking for a failed breakout to the downside. And as sellers pull their positions, you get that liquidation back inside the range. That's primarily what I'll be looking for. I highly doubt we're going to come down to here, but the 38.10 is where we turn extremely oversold, worth having on your chart nonetheless, just in case we end up with a bullish catalyst out of FOMC. Again, what's the bull case for the dollar if we've got CPI and the jobs data coming down? A market crash, but markets aren't crashing at the moment. They're at all-time highs. So for me, I think we're going to see more weakness in the dollar next week, personally speaking. So in that scenario, if we do get this just kind of chopping around into Wednesday, once we get FOMC taking place, if we start to see the dollar selling off, they cut rates, maybe they come out and they're dovish, they talk about 50 basis points, perhaps, a future meeting or whatever. Then you get the breakout to the upside in silver. You can look for the pullback, moving average follows it, and you can look for that follow through bull flag opportunity into the 44.18, great profit take in target next week for any longs in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.